approved or for whatever reason. And in that case, they're like, well, our loan officer said you're not approved, so kick rocks. But here's the saving grace for a lot of our clients, as they said, but I was already qualified with Chris and Lee. Can I just get them to take over and close the loan? And it's happened many times, okay? Many times. Now, does that always work that way? No, it doesn't always work that way. Sometimes the builder's lender is able to close it, no problems, no issues, yada, yada, yada. All of this is a relationship they build with a builder, and there's money involved. And but the truth is, are you getting the highest loan officer? I don't know. But Mammy of Zero, I'm sure everything's going to be fine, but what Lee said is accurate. Just remember our numbers in case you have any questions as you go through the process.
Mammy of Zero, I'm not sure everything's going to be fine, but I hope everything's going to be fine.
Yeah.
How about that?
Mohammed Rizwan, does the 12 bank statement loan program work for Virginia too? VA all day. So Virginia, yes, we could do the 12-month bank statement program. We can pretty much do all the programs in all states that we talk about, except for the California-specific one that Lee talks about a lot.
The Cal Halfa state? You're talking about the Cal Halfa Dream for All, the Uncle Gally. Uncle Gally's for your
wife. Yes, I'm ready for you to call me, Chris. Let's do it. So make sure you text us your phone number. Text either one of these. We'll make sure you get a phone call. We'll make sure we get you on the right path to home ownership. Guys, this is not a hard process, but it may be a little bit of work that you guys need to do if you don't qualify, but it's not a hard process. Getting pre-qualified takes about 5 minutes. Getting you data, as long as we have everything, we can get it to you pretty fast and let you know if you qualify or not.
And we appreciate you on Facebook, Instagram, TikTok, and YouTube.
I'm sorry, SWVG wife. I don't.
Okay.
These names are different than the ones that we see on the application. Yeah. So we got your back. No worries.
Do you help in El Paso, Texas? Yes, we do. El Paso, Texas. We love El Paso, Texas. There's a lot of specific down payment assistance programs in Texas, and they're governed by the counties. My actual primary residence is in Travis County, Texas. So I know the programs. We work with the programs. Love to help you in El Paso, Texas.
So Siri Ho, second home qualifications.
Good question. Second home. So first off, in order to have a second home, here's a deep down qualifier. You have to have a first home. Then you can have a second home. Okay, cool. So that's first qualifier. You have to have a first home, then you have a second home. Then you have to find out if it's actually second home by your definition or by the lending world's definition. By the lending world definition, you have a primary residence and you need a second home in Aspen or in Texas or in Florida. You need a second home that you're going to live in one and you're going to go to the other back and forth. That's your second home. Not the second home you bought, but your second home for your personal use. And if it is your second home, the requirement is pretty easy. It's 10% down. You need 10% for a second home. 10% down. And you're going to need reserves. You need a decent FICO score, but 10% down, you're going to need reserves, and it can happen. But now let me change that script just a little bit. Let's say you have a house, and you own this one, and you've been living in it for 5 years, and you know what? I want to rent this bad boy out and get my second home. Well, that's not a second home from a loan perspective. From a loan perspective, that's a new primary residence. If we're doing a new primary residence, well, then all I need is a lease agreement off of the departing residence. I need to get you qualified for the new primary residence, and we can go traditional FHA 3.5% down. We can go conventional 5% down. There's a lot of ways to skin this cat. We can make it happen. I hope I answered your question.
Why would you skin a cat?
I don't know.
Okay, Mammy of Zero. Thank you so much. Thank you have a great weekend. You too.
We enjoy you, Mammy of Zero. We really enjoy you. Thank you very much.
Hey guys, do you work with back-owed child support? Back-owed child support.
You take that.
Work with? No, I don't work with that. But can I do a loan if you owe back child support? Yes, absolutely, 100%. You're gonna have to settle some of it, no doubt. Okay.
Settle it? What do you mean? What do you mean?
What's happening here is that if you're back owed, that means that the county's involved now. That means that the county wrote some checks that they wanted you to for whatever reason, and now you owe the money, and now it's going to come up on your credit report. Odds are it's going to come up in your credit report. So what that means is you got to start paying that debt. You got to start making your monthly obligations, and if it is back pay, if it's like something that you owe from a long time ago. You got to get with the court system and just get current, okay? And then get us some documentation. We can absolutely work with that.
Heart us up. Let everybody know that you're loving it. It doesn't cost you a thing. Just touch the screen a whole bunch of times on Facebook or on TikTok or on Instagram. Instagram is more balloons and thumbs up. Facebook is thumbs up, and YouTube. I don't know, man. I don't know how they make YouTube make us look amazing. But heart us up. Thank you very much for the hearts. I appreciate you. Thank you for the balloons. Facebook, TikTok, Instagram, and YouTube. We appreciate you. We are trying to help. You forgot your tie again.
You did. Why do you keep
User
forgetting?
46012.
Why do you keep forgetting? We want to know.
Oh my God, you're right.
Do you walk out with your pants off too?
I forgot.
Yes or no?
I forgot my tie. Okay, cool.
Liana Cronier, do you have a program to help buy a mobile home?
You take that.
No.
Okay.
We don't finance mobile homes, but you may be confusing this with manufactured homes.
But.
So here's what that means. So if you're going to get a manufactured home that's attached to the earth with a permanent foundation and meets a couple other tests, then you may be able to buy that as real estate. But what you're talking about is something that's on a trailer, mobile home, something that has wheels, mobile home, that you can hook up to the back of a truck and drag it wherever you want in the nation. Or maybe even Mexico or Canada if you choose.
Dude, you're going to Mexico
Maybe.
Canada?
They have roads.
That's crazy.
They have roads.
It's
so
just crazy,
that's what
man.
you're talking about. But I'm talking about manufactured. And in that situation, yes, you can buy it.
Interest rates 5.75 on the New American Funding website. If you don't believe me, go to the links. Go to Cool Stuff. You'll see today's rates.
Narcissist playbook?
Oh, dude,
Do
narcissist.
any lenders look at the time rent payments? I just graduated college, so my credit is shot.
Okay, so narcissist playbook. I love the name. I do love the name. And just because you graduated college, why would your credit be shot? Your credit doesn't get shot by graduating college. That actually is a good thing in life. I don't know what they taught you in college, but after you graduate, that's a good thing. If you paid your bills on time, that's a good thing. Now, if you didn't pay your bills on time, that's a bad thing. And that's how you get your credit shot. So, graduating college and having your credit shot, they kind of don't line up. But let's put that aside for a second. If you graduated college, and let's just say you graduated with an engineering degree, and you immediately went to work as an engineer, and you got the degree, and you went to work, and they said, hey, Mr. Engineer, you graduated from college, so we're going to start you at $150,000 a year. Does that happen? Yes, it does. Do you need to be working there for 2 years before you get a house? No. One paycheck. As long as you got the degree and you went to work in that field. Now, the credit shot is something a little bit different. We have to figure out what credit shot means.
Yep.
Because if your credit shot is it went from an 800 all the way down to a 660 and you got an engineering job, you're getting a house.
It's not shot.
It's not shot. That's pretty good. If you didn't pay your bills for the last 4 years, I don't care if you got a job making $500,000 a year. You're not getting a house.
All right. So Narcissist Playbook also said, but I always pay extremely high rent on time. We will look for the verification
VOR.
of rents.
Yeah. It's called
We
the
will.
VOR, yeah.
It's called the verification of rent.
That'll help a little bit,
It'll
but
help
not a
little bit.
lot.
It'll
Not a
help
lot, yeah.
But a little bit. Veronica Amador, on your professional opinion, is somebody that makes $150,000 a year take by a house of how much? On your professional opinion, is somebody make $150,000 a year take by a house of how much?
Take buy a house?
Can buy, I would say.
Can buy a house? Can buy a house? So, it's just math. I mean, it's really math. If you're making $150,000 a year, you're in a very, very good spot. I would say you're in the neighborhood of 580 to 620. There's gonna be a lot of variables inside of there. Like for instance, property tax base. If you're in a high property tax base, it's gonna reduce your buying power a little bit. But let's say you're in Arkansas where the tax base is very low. If you buy a $500,000 house in Arkansas with a very low tax base, you're living in a mansion, like a mansion. In California, if you're in Los Angeles, $585,000, 1 bedroom, you might get a bathroom.
Brianna Jimenez wants to know what credit score is required.
It's what is required. Well, Brianna Jimenez, if you're VA, there is no requirement. None, zero.
If you're not VA.
None. If you're FHA and you got a lot of money, 500.
What if you don't have a lot of money?
If you don't have a lot of money, FHA, 580. What if you don't want to go FHA? Fannie Mae, Freddie Mac, 620. But wait a minute. What if you want most down payment assistance programs? 660. unless you go with New American Funding, and we have one with 600.
All right. User
help?
6213. Have interest rates gone down?
A little bit. I'm locking a loan today because yesterday and the last few days we've been floating, and they've been doing this click, 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 click. Now, when you say is the interest rates going down, it's like the stock market. Did the stock market go down? Probably a little bit, but did it affect the rest of the world a lot? Not a lot. Over a long term, a lot of downs affect. Over the long term, a lot of ups affect. It's been going down ever since CPI came in about 2 weeks ago, a little hotter than we thought, because we thought 2.9, it came into 3.2. Interest rates spiked. They went 50 to 100 basis points in a day, that fast. But since then, there's been some certainty in the market, so it's been slowly coming down just a bit.
Nice.
And every single day, we're like, should we float? Should we lock? We both have loans that we're working on, and we're like, should we float? Should we lock? Should we float? Should we lock? And we go like, paper, rock, scissors, float. Paper, rock, scissors, flock.
Flock.
And today, lock.
All right. Carrie is laughing at you sideways and then 3 times this way.
Damn.
Gelato. USDA requirements.
Okay, so USDA is a geographically driven loan. Heart us up. Give us some balloons. Throw a mustache on this guy. Do something. Let the algorithm know that we're here to help you get a house in 2024. In USDA, you would go to usda.gov. You would put in the address. And it would either be green or red. If it's green, that means you're good. That house can be financed USDA.
Nice.
If it's red, doesn't matter if you want USDA. That's it. So after the house is green, the property has to qualify first. Then the buyer must qualify. USDA, pretty simple. It's a straight government program. It's a specific underwriting system called GUS. GUS, Government Underwriting System. Shocker. So we just get you qualified through GUS, get you going, and we're good to go.
Deanna Cronier said, nice.
Nice.
Thank you.
We're here for you, Deanna.
Eyes on the prize. Side hustle.
You talk about that.
Side hustle is something you do on the side.
Good.
And you hustle.
You're damn.
And there's opportunities to make money. So here's what it is, guys. There's a lot of side hustles out there. So many of them. You could drive people from point A to point B. You can drop off people's food and groceries. You can sell flowers on the corner of the street. There's a lot of things you could do. What we choose to do, because all those things take a lot of time, is we choose to do online digital marketing. And if you want to learn how we do it, you can follow these 2 feeds right here on TikTok, and it will share with you the things that we do. And what it is basically you're taking products of somebody else's, could be this, and selling it and making some cash on it. And if you don't have any products, we have a product for you. It's called the Roadmap to Riches, and it has master resale rights, which means you can resell it over and over and over again and make money too. And what is the Roadmap to Riches? It's a tool, it's a map, literally a map that says start here and then go all the way through, and then you'll have an online digital marketing business. You'll know how to operate it, you know how to market it, you know how to find customers, you know how to do everything. So if you know nothing about this business, it will teach you everything.
Everything.
Does that make
That's pretty good? Yeah, it's pretty good. I'll give you that.
All right,
Pretty
Brianna
good.
Jimenez, what credit score is required?
Did we do that one already? I think we did.
All right.
Well, I'll do it again just in case. FHA 580 for 3.5% down. Fannie Mae, Freddie Mac 620. You can go all the way down to 500, but you need 10% or more down payment on FHA. That's simple.
Dude, Mary Boo is in Arizona.
We love Arizona. I love
Mary
Arizona.
Boo.
Arizona.
16.
ASU is some of my best times in the whole world right around ASU. Love Arizona.
Yeah, the improv's pretty cool there too.
Yep.
Gelato, USDA requirements. We already answered that one.
Yes, we do.
Mary Boo again, and I would like to know how one avoid a high mortgage payment.
Mary Boo. Mary Boo. Very simple. First off, high mortgage payment is relative.
Oh.
So, if to you a high mortgage payment is $6,000 a month, well, then you avoid that by getting a $4,000 a month payment. See that? Shocker. So, mortgage payment is just math. It's straight math. How much money did you borrow? What term? What interest rate? Straight math. So you find your math. And if you say, hey, $500,000 at this interest rate equals this payment, and that's high to you, well, then you can either reduce the interest rate, reduce the borrowed amount, or increase the time. That's it. It's all math. So when we figure out what is right for you, we can do it. Now, if you take a look at the big picture, right now rates are high. They're high like traditionally in the last 20 years, we're high. We're in the high end. So last 20 years down to 2, all the way up to 8, we're in the 7s. So we're close to the high. So no matter what you do, interest rates are going to be high. You have the ability to buy it down a little bit, but I don't know if that's a smart move. Why? Because if you're borrowing for 30 years and you borrow, let's just say you lock in at 7%. 7%, pretty high. Let's say you lock in, but 2 years from now, rates are at 4. Are you going to refinance? Of course you are. Of course you are. So you need to think about that long-term strategy. Because right now, some builders are saying, hey guys, what I'll do for you is a 2-1 buy down. And it sounds amazing. Because let's just say your par rate is 7.5, but they say, you know what, the rest of the world's paying 7.5. Not you. Not you. Not my customer. My customer is paying 5.5. And you're like, wow, Mr. Builder, that's amazing. We love you so much. You're amazing. Oh, yeah, 5.5 for the first year.
Mr. Builder.
Next year.
Not
Lady Builder. Not Lady Builder,
Man,
Mr. Builder,
right.
yeah.
Sexy.
So 5.5 for that first year, and then the next year you're going to pay 6.5, and then the third year you're going to pay 7.5. And you're like, hey, you're so good to me. You're so good to me, Mr. Builder. And then what you don't even understand that they've done is they've guaranteed your interest rate's going to go up. Guaranteed. And if you follow the market, the Federal Reserve says interest rates are going to go down. So while your interest rate is going up, everybody else's is going down. And you know what Mr. Builder charges you to do that? $20,000. $20,000. Why? Because it looked better on the front. The truth is it wasn't better on the front. It hurt you. Why? Because in about 12 months you're going to refinance anyway, and you did not get the full benefit of that $20,000. It would have been far better used to a principal reduction. Principal reduction. But you know what? That doesn't sound sweet and shiny. They wanted to give you something sweet and shiny. 5.75. No, I'm sorry, 5.5. 5.5. They want to give you 5.5 because it looked good. But they didn't tell you the whole story. And if you refinance before the 3 years, you've wasted 20 grand. Sorry.
What are you sorry about?
I don't know. Just getting a little.
You're just lying to us?
Dude, I just get a little bit. I get a little
Mary
heated.
Boo, here's my
Mary
example
Boo.
of that. Here's my example of that.
Yeah.
So how do you get a cheap payment on a car? Buy a cheaper car.
Okay.
Same thing on a house. So
Right.
how much you pay is how much you're going to pay on a loan. Franchise, A-Rod, user,
A-Rod.
Garcia.
We appreciate you,
All
A-Rod.
the
We
love,
appreciate
all the
you.
hearts, all the shares. This helps us get out and talk to more
Yeah.
people to get more questions that help answer you guys.
Yep. Heart us up. Give us some balloons. Throw a mustache on this guy. Do something. VA.
9973. So with VA, is it guaranteed approval?
Is it guaranteed approval of VA? Is it guaranteed approval of VA? I'm gonna break your heart. 9973. No, nothing's guaranteed. Nothing's guaranteed. Nothing. You could have a VA loan TBD underwritten, and we basically checked your job, and they said, hey, yes, Mr. Veteran makes $60,000 a year. We said, hey, we're good to go. This is a fully TBD underwritten loan. Is that guaranteed? No, because right before we close the loan, the underwriter is going to call and say, hey, does Mr. Veteran still work here? Oh, he got fired yesterday? Boom, no loan. Nothing's guaranteed.
What if there's a sinkhole and the house falls in it?
You know what? You probably don't want that house anymore
You probably
because
should
it's gone.
get
Yeah,
an inspection.
yeah, it's probably gone. So, VA is one of the better loans out there, no question about it. If you qualify, and you have to be a veteran, honorably discharged, you have to serve a certain amount of days. There's a lot of requirements, but if you meet that requirement, VA is one of the best loans out there. I love the VA loan. When it's applicable, I use it.
And don't forget to mention VA no-no.
Oh, shoot. What's a no-no?
VA
You tell your
no-no.
version of a
So
no-no. 'cause
all
I get
your
crazy.
vets out there, all the vets out there, don't forget to tell the loan officer, hey, can I get a VA no-no? That's no down payment, no closing costs. Because vets, assume that because VA has zero down payment, that there's also no closing costs. But there are closing costs because the appraiser wants to get paid, escrow wants to get paid, title, the notary, everyone that's involved wants to get paid.
The notary wants to get paid?
Believe it or not, because they drove 2 hours to see you in the middle of the desert.
They're not doing it for free?
Using their
What
gas
if you're
money.
a nice guy?
Still, they want to charge you, man.
What if they're a nice guy?
The trash man charges you.
What
The
if you're a
postman
nice guy?
charges you.
What?
Everybody charges you.
All right, cool.
That being said,
Whatever.
VA no-no, tell your loan officer.
Whatever.
Cherry, I'm a 1090 worker. I think that means 1099.
Yep.
I need a business plan for USD loan.
I need a
Cherry.
business.
And Cherry, she put her name.
Cherry with a
and
cherry,
then she
yeah.
put cherries on the side in case you can't read.
I need a business plan for a USDA loan. So a business plan is for a business. A USDA loan is for a house. So if you need a business plan, that's in the business world. If you need a USDA loan, That's in the U.S. That's in the mortgage world. I think what you're saying is that you need to make income from your business so that you qualify for that USDA loan. I'm extrapolating here just a little bit. And I'm going to say that will all be shown 100% on your taxes. So if you say, hey, listen, I'm a 1099, I'm like, okay, cool. Are you a Schedule A, Schedule C, or do you file 1120s and K1s? If you don't know what I'm talking about, then you haven't been in business long enough to know yet what I'm talking about. But once you've been in business long enough, you're going to say, hey, Lee, I file 1120s. And I say, cool. What's your percentage ownership? You're going to say 100%. I'm going to say, cool. Send me your 1120s and your K1s and your 1040. I would say send your W-2, but you probably don't have a W-2 because you made your money through the 1120 and the K1 that flowed through to your 1040. And from there, I can calculate your income. And if I can calculate your income and then plug in your income to a USDA loan, I can help you get a house through a USDA loan as long as the house is qualified through the USDA. Boom.
Will that conflict with the 5181-211?
Oh, that hurt my brain.
What about an AB 4187?
Oh, that hurt my brain.
Okay, never mind.
Okay, cool.
Irrelevant. It's back office.
All right,
stuff.
back
Back
up.
office.
Gelato. Gelato.
In the house.
Appreciate you,
Ryan,
Gelato.
Ryan, what's up? What did Jerome say, man?
What did Jerome
Ryan
say?
wants to
Jerome's
know what's Jerome
boring,
saying.
man. Jerome's boring. He's like, hey, listen, guys, things are getting better. Yeah, getting
Give me
a
some
little
gossip,
better. No,
Jerome.
they're not. He doesn't go like, hey, I'm dropping the rate 7% today. No, he doesn't do that.
Give me some
That's
gossip.
Jerome Powell. Jerome's like, we believe we've got things under control, but I'm not very excited to make moves quickly.
Can any of you out there tell me what this group is? This group is Lee's graduating class.
And the cartel.
On to the next.
You want to talk about the cartel?
And the cartel.
This is the cartel. It's
the
not the
cartel.
Cali cartel. Oh, we need a Cali cartel. Oh, we need the Cali
Dude,
cartel.
you're stirring the pot too
Oh,
much.
okay, we don't talk about that.
Stirring
Okay,
the pot.
got it. Okay,
All right,
got it.
Ryan, but what's smart? Buy down if paying house off in 5 to 10 years instead of 30? Is that smart?
Is it smart?
Doing a
What?
buy down.
Okay, hold on. I didn't see buy down in there. What's smart? What's smart buy down? If plan is pay 5 to 10 years instead of 30.
Yeah.
Ryan, if you're literally going to pay off your house in 5 to 10 years, I wouldn't buy down anything. In fact, I would go the other way. I would be like, okay, cool. What's the max amount of interest rate I can get legally? There isn't a max amount. I would say, give me the max amount. Why? Because the lender's going to give you money. If you say, hey, listen, my par rate is 6.5, but I can take a 7.875 and get $20,000 back legally, because there's like limits you can do. It's like 1%, 2%, 3%, 4%, 5%, 6%, depending on the loan and the scenario. But if you were going to pay it off in 5 to 10 years, that means that you're going to be paying mass towards principal anyway. And you're not going to let the bank have the victory lap of making all the money on the interest. So I would say, hey, Mr. Bank, give me all that money right up front. Come on. Give it to me. Give me every little piece of it. Give me some more. Hit it right here in the vein. Okay, cool. Stack the bank account. And then as soon as you're in the loan, make the first payment. And then start making mass payments. And then make them go recast. Why? Because I keep paying 50 grand off. And the bank's going, oh, no, don't do that. I won't make any money if you pay it off in 5 years. And I gave you 20 grand. Don't do that. I'm not going to make any money. The bank kind of knows everybody has this idea. They bet that it's not going to happen.
It won't. Well, I hope it does for you, Ryan.
I hope it does for you, Ryman.
But statistically speaking,
yeah. It's like Vegas. It's like, hey,
know.
have you ever been to Vegas and you hit like one slot and you're like, I'm good at
I can do this every time.
and then you tell everybody, oh no, every time I go to Vegas, I come out with $1,000 extra.
Every time.
Everybody tells me that story. I'm like, yeah, if I'm being honest, I might have won $1,000 on one hand, but I lost 8,000 on 7 other hands before that. So I'm net down money, and that's kind of what the bank plans on.
So you're welcome, Michelle, on the VA question, but she also said that she's sad that she didn't meet us a month ago, and I don't think it's too late, Michelle.
Yeah, if you are not closed escrow and you would like to check your VA lender, you just send us what's called a locked LE. And we'll go, hey, Mr. Bank, we have the ability to beat veterans suicided. Yeah, veterans suicided. And we have the ability to beat them. Mr. Bank, are you feeling like you want to be in a competition today for the benefit of my clients? And Mr. Bank, New American Funding, will say, well, let's take a look at that locked LE. And they'll go through and they'll go, hey, I'm willing to lose some money in order to give this person a better deal. Why? Because I want to keep this person for the next 30 years. And the truth is, if you do a loan with us, they want to keep you. We service our own loans. New American Funding largely services their own loans. Most of them. Not all of them, but most of them. And because of that, they're looking at the long game. And they'll also say, hey, you know what we're going to do in addition to that? If you refinance within the next 5 years, free from the bank side.
Nice.
Free.
Nice. Cool. Hector, you said hardest up. Hector said done.
Hector.
Here's your heart, bro.
Appreciate you, Hector.
Nardos, I make $49,000 a year. How much can I get approved? Nardos in the house again. Welcome back.
Nardos, what do you think, man? What do you think?
47 G's? Shoot. 49 G's, sorry.
49 G's? I'm saying close to 200.
Boom.
You think so? Close to 200, depending on your tax base and your credit score and your insurance, ironically, is becoming an issue right now. Insurance is becoming an issue.
Ooh, big issue. You're right. Yeah, insurance sucks. Vanny Clips. Is there any down payment assistance in Illinois?
I just did one on Illinois. I think it was last week.
Man.
And yeah, there is one. There's one in Chicago. It's a good one. Call us. We'll get you going.
Greg's 50 Cars said you should have a 1099 from your K1.
Okay. All right.
Jerome ain't dropping until the end of summer.
You think so? Well, what's the end of summer? What month do you believe is end of summer? July? Okay.
Well, I don't think that's in the summer, but I'm going to say July.
You think July meeting? You think the July meeting? July. I think it's going to be July meeting. I don't think it's going to be. I'm pretty sure it's not going to be the March meeting. I mean, everybody thinks
March.
Yeah, March. And then when's the next one? May. It's not going to be the May meeting. It might be the June. It might be the July. But I think you're probably right. We're still 3 or 4 months from that. And when that starts happening, it's like the beginning of a roller coaster that has like 40 cars on it. The first car is gonna go, here we go, and then it's gonna gain steam. And it's going to start going crazy. We actually believe quantitative easing is going to kick back in.
Ooh, I love quantitative easing. I'm scared of it, too.
I don't.
I love it, and I'm scared of it. You know why I love it?
Cocaine's a hell of a drug.
Yeah, it just infuses like a big dog. Steven, attorney review, done, deposit, given, just waiting for loan approval. How long does that take? We are scheduled to close at the end of this month. Steven, is this with us? Because I can look right now and tell you the exact day.
Yeah.
But I don't think it is.
Well, let me read that one more time because I want to say my little piece, dude. You're not the only person on this
pieces.
show.
You don't have pieces.
Waiting for loan approval. You should. I mean, loan approval is pretty fast, man. Usually, like right now, there's not a lot of loans going on in the system. There's just not. And most banks, when they get a loan, once they flip it to the underwriter, and that's the key, because there's a process. There's a loan officer, then there's a processor, then there's the underwriter. And the underwriter is the one who finally gets a packaged loan. It's packaged. They don't have to do anything to it. They have to apply their guidelines and their rules, and that's usually 24 to 48 hours. And you get either a referral, which means it didn't get approved, or you get a conditional loan approval. And the conditional loan approval says, hey, you must meet this valuation. You must still have a job. You must prove that your money came in. Just these things, and then you have a conditional loan approval. That's usually 24 to 48 hours. It's not that long.
Yeah. Eyes on the prize. How about paying down faster through a HELOC? I'm going to assume this piggybacks on the one about paying the house down?
Yeah, I don't really know.
So a HELOC, you're taking another loan. So you're not paying down faster if you're taking another loan. You're just taking another loan.
That's like paying your MasterCard off with your Visa. Yeah. And you might think you're paying it off, but you actually made a bigger problem.
So, guys, HELOCs, second loans, are still loans that have liens against your property, guys. They do. They're attached to the property. They're going to get their money back. There's no way to separate them. So, it will be. Sati, I have some money saved. Should I pay off the house or invest in another property? Current interest rate, 4.75.
That's cheap money. I wouldn't mess with that cheap money. So, the easy answer to that is, in this interest rate environment, because you can't get that 4.75, even if you tried, you could walk in with a $100,000 check. The bank won't give it to you. They will only give you so much. And I think the low on the sheets right now is 5.25, probably 5.25. So that's cheap money. I would keep that cheap money right now and probably aim it somewhere else.
Margaret Barron, Emery, thank you for the love. Le Circle Blue Dot.
¿Dónde están? ¿Dónde
Circle
están? Este está aquí
Aquí.
y yo está aquí también.
Aquí también.
También. We don't speak Spanish, by the way. He is right there. I am right here. We are in Riverside, California. We do business in all 50 states. How many? 50. Which one? All of them.
There you go. Martha Perrin, 580, buy a home. But what's the amount you're qualified for when using our VA for $150,000? 580.
I'm going to guess that's FICO.
What's the amount you're qualified using our VA for? Okay, so you're $150,000 income?
If that's the case, you're probably in the 580s to 620s. But the VA loan, it's a residual driven. It's the FICO is a small requirement, but it's not a requirement in the VA guideline. Like there is literally no FICO requirement in the VA guideline. However, they do look at your payment history. So if you didn't pay bills on time, it's going to get factored in. Everything's going to get factored in. But the big calculation on the back of a VA loan is called a VA residual. And the residual is broken up into geographical region. There's east, west, north, and south. I don't know why they did it that way, but they cut up the United States into east, west, north, and south. And you have to put in, where do you live? Do you live on the west coast? Do you live on the east coast? Do you live on the north and the south? So once you put that in, there's a VA calculation that kicks in, and then we have to factor in all your bills. And that's when all that stuff comes in. And after we do that, and you qualify, you're good to go. The FICO score is almost irrelevant. I will say almost. By the guideline, doesn't matter.
Nice. ¿Dónde están ubicados ustedes?
Do you know what avocados is?
Avocados are delicious.
Avocados are amazing. California has some of the greatest avocados around. We don't speak Spanish per se. I can get myself in trouble with Spanish. That's about it. But we do have two predominantly Spanish speakers on our staff. Say what's up to Martha. Say what's up to Aurora. Ready to do all the business for us in Spanish. We can help you. By the way, there's 7 loan officers that help us with our loans. We get a lot of inquiries through what we do here. A lot of inquiries, a lot of them. We have 7. Shout out to Ryan,
Sean,
Jerry, Sean,
Aurora,
Gordon, Martha, Chris,
Lee.
Lee. That's 8. I'm sorry, there's 8 of us.
He's bad at math, guys. Get him
Whatever. OZ
Trev. If I want to upsize to a bigger home, do I need to sell my current home before buying?
Maybe not.
He said.
Maybe not. In fact, I'm doing a VA loan right now. A VA loan. So a VA loan where the borrower already owns a house in this part of Texas, and they want to buy a house in another part of Texas after they lived there for 5 years. And they said, hey, do I need to sell? And I said, no. And then ironically, this situation, they're both veterans. So they used one of the VA entitlement on this house. And I said, did you rent it out? Yes. For more than mortgage payment? Yes. Cool. That scratches. Doesn't matter anymore because I can wash it because of the VA guidelines. And because the other borrower has a clean VA entitlement, we're looking for another house over here. And we can still own this house and now own this house. And everything works perfect.
Boom. Eyes on the prize with a beautiful translation for us, helping us out every step of the way. Where are you guys located is what he asked in Spanish.
I'm going to try in Spanish. Este está aquí. Yo está aquí también.
Riverside, California. But guys, okay, everyone wants to know where we're at, and that's awesome. SoCal is where we're at. But if you can't get here because you're in New Jersey right now, go to the top.
Yeah.
Click on the link. It's stand.store. It's our link in our bio. Click on apply for a home loan now. It'll come straight to us. We'll get started on it. You'll get a phone call in a day or so, and hopefully we can get you guys into a home.
Who's that on Instagram right there?
I can't read it.
Okay, cool. We're here for you. We're here to help you.
Sell smart with art.
Sell smart with art. What's up, Sell Smart with Art? Hey, by the way, if you're a loan officer, if you're a realtor, if you're anywhere in this space, we love you. I don't care if you're my competitor. Come on board. Let's talk about guidelines. If you know more than me, please teach me something. Okay. I'm always looking for somebody to teach me something.
You when we're done.
Okay. But the odds are you probably don't. So sit down, son. You might learn something.
What?
I saw a mortgage loan officer yesterday on
You seen one?
TikTok, and
awesome.
This mortgage loan officer said, hey, listen, if you have child support and you have 12 months of child support, well, I can use that child support as your income. And in my head, I'm like this. I'm literally on the road going, no, that's not it. That's not it. And then I actually called him and I'm like, hey, listen, take a look at this. Do you believe that? Do you agree with that? And he's like, what'd you say?
No.
Why not?
Well, number one, it's not court ordered.
Okay. And if it is?
And if it is court ordered, we have to use that amount.
12 months? Do I need 12 months
Maybe
of court order?
I don't understand your question.
Okay, do I need 12 months of court order child support?
To use it?
Yes.
No.
Oh, how much do I need in order to use it?
I need a court order.
I need 1 month. I don't even need a payment. I just need a court order. Once I got a court order, I can use it. So be careful who you're listening to and make sure they can quote the guidelines and make sure they can actually tell you what they are and prove it if they need to. So if you know more than me, please teach me. And if you don't, sit down, son. You might learn something.
The Pacific 48. Can I get approved for a mortgage even if I'm married, but separated?
Okay, so do you have a legal separation, or are you separated and she doesn't know it yet, or he doesn't know it yet? So the answer is yes, no matter what. Yeah,
maybe.
Well, actually, almost yes, no matter what. And even a community
Oh,
property
you're
state,
right,
yeah,
you're right.
in a community property
You're
state.
right.
So here's how it works: Fannie Mae, or so straight government loans, FHA, VA, and USDA. I'm going to have to pull the spouse's credit. I'm going to have to, and use the liabilities against their income, against your income. On a conventional Fannie Mae, Freddie Mac, if you can qualify for the loan on your own, most likely I don't even have to involve the spouse. With the exception, they have to know you're buying a house and you have to say, hey, listen, this is going to be your house. You agree with that?
Yeah, and this, I don't know why, but this thing, it's under my skin every single time. Like, married, separated, divorced, married, maybe I'm not married, maybe I am. Like, it's so much drama. Guys, get it together. Eyes on the prize.
Was that just a Dr. Phil moment?
Yeah, kind of.
Okay, cool. You're like, that had nothing to do with mortgages.
Zero.
That was just
Zero.
that was a Dr. Phil moment. You're like,
Zero.
he's like, I want to be the brown Dr. Phil.
Guys, just focus on life. It'll get better. Carrie, can you help getting real estate license?
All we can do is kind of guide you to a school. Yeah,
I could be your cheerleader.
We can tell you, hey, watch, and we can tell you we work with top producing realtors. We sit with realtors almost every day. That's the goal: sit up with a brand new realtor every day, and we know which one. We know who will make it. Basically,
here's what I can give you.
Give me.
No, so your license, we can't sit for your license. We can't study it for you. You got to pass it yourself. But once you pass that part, we can teach you how to build your business. We absolutely can teach you how to. The hardest part of it is building the business.
Yeah.
So pass your test, call Lee, get you on the right track.
And here's the key, man. It's a people business. If you think you can just pay for Zillow ads or pay for it's a people. You need to talk to people, and you need to know your stuff. It is a product knowledge business. You really do need to know your stuff.
Nice. Jeff, do you guys do first position HELOCs?
Nobody does. Well,
if it's zero, you can be paid off.
I guess so, right?
In that case, yeah. But
You-
aside from that,
For the rest
no.
of the audience who doesn't know the conversation we just had, can you tell them what the conversation we just had was?
So if you have a loan on your house right now, that one's in first position. He's asking, can I put a HELOC in front of that? And I don't know a bank that's going to do that. I'm sure it exists somewhere, but I don't know a bank that's going to do that.
We can.
So if you don't have a mortgage, it will be first position. So if you currently have a mortgage, I don't know if a bank that's going to do that. I'm sure there's one out there. But aside from that, no. Janeth Orleans, is it possible to buy a house with pretty much no money down or closing costs?
Janeth, yes.
Yeah.
It is.
Yeah.
Is it easy? No. No. In fact, we have something in California called Calhafa. And we have Calhafa with a zip pack.
They're very creative with that name.
Yes, they are.
Cal.
Yes. Calhafa with a zip pack.
Chris Haffa.
Calhafa will do 3% down payment and 3% for closing costs. But you better make enough money to buy a house. Because if I qualified you, let's say I qualified you on a Calhafa program without the Calhafa for 500 grand. 500 grand. 500 grand. Yay! Using your own 3.5%. And you're like, and your own closing costs. All right, cool. So now we say, hey, Lee, I don't want to use my own 3.5% down, and I don't want to do my own closing costs. We want to use Calhafa. All right, your $500,000 house, you're now qualified for $400,000. What? Why? You told me 500. I said, yeah, 500 if you're putting your own money in because you got skin in the game and your risk is yours. It's not somebody else's. But if you want to transfer the risk to somebody else, they're going to back off your buying power so you're not redlining. That makes sense, right? Everybody goes, well, I guess since you put it that way, Lee. Yeah. So can it be done? Yes. Is it easy? No.
And if you're trying to accomplish that, now is the time when you will not be able to accomplish that at all
Never.
is when we get the real estate boom.
Yes.
And everyone's competing.
Uh-huh.
And everyone's paying for everything on their own.
Yes.
So the only chance you have is probably this next 6 months.
Yeah.
Inside of this next 6 months. Because after the fact, chaos.
Yeah, here's what's going to happen. The $500,000 house is going to go on the market. And they're going to go, okay, cool, we're about to do the open house this weekend. After the open house, 10 offers are going to come in. Of those 10 offers, 3 are going to be lowballed. 3 are going to be at price, but 2 of them are going to be down payment assistance. And then 3 of them are going to be overpriced. So first off, if you're the seller and you want to sell your $500,000 house and somebody says, hey, listen, we got some guys who are coming in lower. What are you going to say? Buy. They're going to say, okay, we got 3 at price. You're going to be like, hey, that's kind of nice. Yeah, that's pretty good. And then we got 3 overpriced. Okay, so tell me the 3 at price. Well, 2 of them are down payment assistance. They could have problems. What are you going to say to those ones? Buy. There's 1 that comes in and, okay, so we'll keep him. And then there's 3 at over. Tell me about those 3 that are over. Okay, someone's going to give me $10,000 over with all of my requirements met. What are you going to choose if you're the seller? Of course you're going to choose the 510 with all the requirements met. It's going to establish a new market. So what Chris just said is the only time you're going to get away with down payment assistance program, because you're not competing with everybody else, now for the next 6 months, probably your best chance.
Probably your best chance. And the window might be smaller, guys, because we're thinking July maybe when the rates start to adjust down, and that's only, 5 months away? So you guys got to get a move on it. Get a move on it. So here's something I want to touch on, and it's going to piss some of you off.
Piss them off.
I'm pissed off. Did you see the State of the Union?
I saw little pieces of it.
Did you guys see the State of the Union?
What did you think of it?
Do you believe what you heard? Do you believe what you heard?
Well, according to what he said, little pieces that I saw, you the viewer out there, are in the best financial position you've ever been in. Inflation is down.
Jobs are up.
Jobs are up. And you guys are happy. According to the State of the Union yesterday, you guys are happy. Yes.
People chiming in already.
You are happy. Yes.
Baby mom said, unfortunately, I saw it.
Yeah. You're happy.
Are you happy, Rudolph?
Yes. Are you happy? Are you happy? So if you saw the State of the Union yesterday, the interest rates are amazing. They are amazing. Yes. Home ownership is at a all-time high. You guys are happy. You guys, oh, by the way, unemployment, record lows like we've never seen before. You guys are happy. Inflation down, lower than it's ever been. You're happy. Now, after I look at that, and I talk to people across America every single day, and I'm like, hey, I don't know what he's smoking, but that's not what I'm seeing. I pull credit on people every day. I calculate income every single day. I talk to people from all walks of life, from engineers, from top guys who are making 400 grand a year to the average Joe worker who's making 50, 60 grand a year. I talk to these people every single day. Not one of them is saying, I'm happy. Not one of them. According to the State of the Union yesterday, everybody's happy. New graduate, 760 FICO, first-time home buyer, job offer, 80 key. 80 key, 80 key, 80 key, 80 key. What can I get approved for? I was just buying some time. Probably about 360 in that range. 360, 80K a year, 360. Even, all I need is your first paycheck, by the way. If you just graduated and you went into the line of work, we are here for you.
Black Circle user, he is correct, man. You see, we talk about this scenario all the time. The new graduate went to school for 4 years, became a professional, has great credit, great income, job offer. This person could buy a house. And this, I don't know how old this person is. I'm assuming somewhere between 20 and 25. This is a kid about ready to buy a house right now because they played the game right.
Right now.
To that little circle user, great job, new graduate. Good
just
job.
give us a call. If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee at New American Funding, by screenshotting this. And you have to screenshot it because it's going to disappear in 5, 4, 3, 2, 1, bye.
R. Duran, if I currently have a mortgage, can I afford an investment home?
I don't know, R. Duran. Can you? Can you? It depends. It depends. It depends. It depends. How much money do you make? If you make a lot of money and you can afford an investment home, well, then you make a lot of money and you can afford an investment home. The question is, can you buy an investment home? So, R. Duran, I'm going to give you something to you. My something to you is this. If you're buying, Nerds?
They called us a nerd.
Dude, I'm a nerd.
Finally, I made it.
You're a nerd. You're nerd. Nerd. You know what Bill Gates said? Be nice to nerds. You may work for them someday.
Boom.
Yep. So, if you're buying an investment property, Arduran, you need 20% down. 20% down. 20% down on investment properties. Sometimes 15, but most of the time, 20% down on investment property. And then you can use the money that's coming in from that investment property to help you qualify for the investment property.
Nice.
So if you have a mortgage, maybe. Dude, I just saw that. My favorite mortgage nerds. Nerds. Dude, you're a nerd. You're a nerd. Nerd.
I don't even wear glasses anymore. Arduran, can I use the HELOC?
Can you use a HELOC? Well, it depends on how much equity you have in your home. Your average HELOC is going to give you 75, 80% LTV. What do you think?
Oh, some of them take it to 95.
95?
Oh, yeah.
What? Jump back. A VA? Can I do a cash out on VA? What's my max cash out on VA?
100.
No way.
100.
You could do 100% cash out on a VA?
100.
You're sure of that?
I checked it last night.
All right, good deal. I knew I set that up for you.
Oh,
Slam dunk, man.
Navy Mom said the gaslighting was unreal last night.
It was crazy. It was crazy. They're like, hey. And then the one thing I think he messed up on, where he went off script, is when Marjorie Taylor Greene said, say his name.
Yeah,
and he's like,
her
oh,
name.
yeah?
Say her name.
I'll say her name. I got no problem saying her name. He got it wrong. But it's like, I'll say, I got no problem. And he's like, he was killed by an illegal. How many were killed by legals?
Whoa.
And I'm like,
what did you say, Mr. Biden?
That hurt my brain.
What did you say?
That hurt my brain.
Are you allowed to say that, Mr. Biden?
I don't think so. Yeah, he was gonna get in trouble. So anyway,
Jocelyn.
yeah, you can you use a HELOC? Yes, you can. 250K in equity, dude. Let's get this thing moving. If you take that 250K in equity and you find a house that's suitable for an investment property, we can HELOC some of that out. Boom, HELOC it out. Put that towards a down payment. Use the debt service, use the income in order to service that property, and bang, you own investment property.
Damn, Martin Kionis, 770 credit score, 70K a year, 1099, $20,000 to $30,000 down. What's his scenario?
I'm a little lost there.
770 credit, 70K a year.
Yeah, but the 1099 threw me off.
I don't know why, man.
The 1099.
Just the way the man gets paid.
Well, it could be It could be about 320,000, depending on how you use that 1099 income. Because if you wrote off a lot, you're gonna have your AGI, and your AGI is adjusted gross income, because most people with 1099 go, you don't understand how important cars are and gas is and marketing. And then, by the way, did I mention marketing? And all that went away. And then, oh yeah, Mr. IRS, I only made 20 grand, so I don't owe any money.
So Martin, what Lee is saying is, did you make 40 or did you take home 40? So make is up here, take home is down here.
70.
So 70, sorry. So if you made 70 and you had $30,000 in deductions, you only took home 40. So that's what he's talking about. But I'm going to take your word for it and say that 70 is your bottom line, and that's what you took home. And based on that, Lee said about mid-threes.
Jocelyn, how long are pre-approvals valid for if you're having trouble finding a property in your area? So, Jocelyn, they loan officers like to tell you like 90 days, but the truth is indefinitely until something changes. Because if you got pre-approved and then 3 weeks later you lost your job, I mean, I don't think I have to say it, but your pre-approval doesn't qualify anymore. You don't qualify because you're no longer qualified. But everything stays static. Well, then your pre-approval keeps going good. Now, what they're referencing is 90-day credit refresh, because the credit has to refresh. We don't know if you took out more debt, if you bought a new car, if something happened, you bought a timeshare, don't do that. If you bought a timeshare, if you did any of these things, then it changes your pre-qual. But basically, indefinitely, if you need a number, 90 days, and then we refresh it.
Yeah, here you go, Jocelyn. Camacho 94 in the house. Arduran, you're welcome. TN Scenario Shop. I just closed on my home. 7.5 interest rate, 15K down payment assistance, second loan, and a $348,000 primary for $2,600 a month.
That's badass.
Good job.
That's a very good
job.
Yeah, that's 7.5%. I know that sounds horrible, but I actually think it's good.
And I'm going to share something with you guys. TN Scenario Shop is all over you, because that $348,000 home will probably be worth $500,000 in no time.
I think, yeah, it's going to go up pretty darn fast. And
Good
your
job.
15K DPA, you're going to have to pay that back. But when your equity appreciates and that 7.5% in the market that will be is 5%. That 15K is going to disappear like that. You'll refinance it in, I believe, and I'm hoping for you that it works out. You get a lower payment and you pay it off because the interest rate is so much lower.
Kaylee, what is the interest rates right now?
Kaylee, 5.75.
Say it again.
5.75.
Holy smokes!
Don't believe me? Go to the links at the top. Go to cool stuff. Today's rates, New American Funding, 15-year conventional, 5.75.
Daddy Chill Moi. Question: is there any programs for rent to own?
Not really. No, rent to own's like a seller incentive. They're like, hey, if you rent this, I might let you own it. It's not the bank. It's not the bank. Yeah, the bank doesn't do that.
You know why they do that? It's so you treat the house good. Mm-hmm. They tell you they want to sell it to you. They tell you that, you know, the intent, give it 2-3 years. But the truth is they just want to rake in your rent, pay the mortgage payment. You're paying the mortgage payment, by the way. And you're going to treat the house good. You're not going to jack up the walls, the carpet, the backyard, let your friends in, ruin things, the plumbing, all the stuff that goes south with renting homes. So they just want you to treat the house good, which you should anyways. It's somebody else's house. Mm-hmm. And if you're sick of that, buy your own.
We'll help you.
You will?
We'll help them buy their own,
nice
dude.
Guy.
I'm a nice guy.
Dank.
I also make a commission.
Ooh, good job, man. Mm-hmm. Dank. Closing March 29th. 310,000, 3% down. Chicago, downtown Chi-Town, 7% rate, $2,500 a month. Another one.
That's
about
pretty
to make
badass.
A bunch of money.
Yes, DMAC. If you're closing March 29th, that's a long way from now. Hey, if your rate isn't locked, you should really think about taking a higher rate. Because I can tell you right now that if you were paying a 7% rate and your FICO is not perfect, you bought that rate down. It's not a free rate. And if you bought the rate down, and let's just say you put $3,000 down, that $3,000 costs you money, and there should be a math situation where it makes you money. But at 7%, you're going to refinance. When rates go down to 5s, there's no way you're sitting with a 7. There's no way. There's just no way. So if you qualify and you can do that math ahead of time and go, hey, listen, I'm going to refinance. And let's just say instead of paying $3,000, you get the bank to give you $5,000 back. And you took a 7.865. So you took $3,000 and you got $5,000 back. So that's $8,000, okay? And let's say the difference is going to be $200 a month. Well, now you put that $8,000 in a little account and you use it to pay that extra $200 a month. And let's just say it takes a year. Well, what's 200 times 12? 2,400. So $200 a month times 12 months. It took a year before the rates went down enough. Well, you took $2,400 away from that $8,000, and you're still left with $5,600 profit. This is playing the game in your favor and learning how to use the numbers in your favor. But you have to understand a whole bunch of mechanics here. And by the way, if you want us to do it for you, call us. Yeah, just call us. We'll actually, and we'll compete for your mortgage if you want us to.
Hell yeah. Daddy Chill Moi said, let me clear my debt first and I'll come to you guys.
We are here for you, Daddy Chill Moi. You should probably not even wait to clear your debt. You should just call Chris right now.
Yep.
Just call Chris right now. Call him. Call him.
Here's
he
why.
answers.
Here's why. Tell him why.
Because he wants you to call him. Now, we don't know if you should be clearing your debt. That's why.
Yeah.
So let's say you have $50,000 in the bank and you have $60,000 worth of credit card debt. And you're like, hey, I want to pay all this off before I get a house. And I'm like, wait. Before you do that, your car payment of $700 a month has 9 months left on it. And you're like, yeah, that sucks. And I'm like, yeah, but the guideline says because it's an installment loan and it's only got 9 months left, I can ignore it. Ignore it. Wait, you mean I don't have to pay $10,000 out of my $60,000? No, just save you $10,000. Wait, what? Yeah, you have to keep paying your car payment until it's paid off, but I can ignore it like it doesn't, like it's not even there, and qualify you without it.
All right.
Facts,
man, facts. R. Duran, where you guys located? All right, Lee.
He's right there. I'm right here. Riverside, California.
But if you can't make it to Riverside, California.
Oh, don't yell.
Oh, but if you can't make it to Riverside, California, what you have to do is go to the link up top, stand.store, click on the link, click apply now. You don't even have to talk to us, but we will give you a call when you're done. Kaylee, sorry, when do you pay the DPA back?
when you finance, when you refinance, or you sell the house. Simple.
Oh, okay,
Yeah.
cool. We're Zach, what do you guys think about seller financing?
I think it's amazing most of the time for the seller, because here's what they do: is seller, it's a business. You have to understand, nobody owes anybody anything. They don't owe you anything. So the seller says, "Hey, listen, you can't get financed by the bank. So you know what I'm willing to do? I'm willing to finance for you. Here's my terms. You're gonna pay $4,000 a month. $4,000 a month. That sounds good. Yeah, that's what I would normally pay anyway. Cool. And inside that contract, it says, hey, if you're 30 days late, I get to take the house back. What? That's not what a bank can do, but that's what the seller can do. And if he's giving you an opportunity that a bank wouldn't give you, then you should never be 30 days late, or you might lose that house. And when sellers finance that way, it has to be beneficial for them. Remember, the seller isn't doing it because he's a nice guy. He's doing it because somewhere in that big hodgepodge, it benefits him somehow. And in this case, if you were 30 days late, I get to retake the house. And then the seller goes, hey, listen, you're 30 days late. You get to, yeah, but you don't understand. I lost my job and my dog just had kittens. So, get that? My dog just had kittens? Yeah, my dog just had kittens.
He's a crazy
yeah.
dog.
And the seller's like, I'll tell you what. I'll let you continue renting for $4,000 a month. And maybe I'll give you an opportunity to buy again at prevailing price.
All right.
So, seller financing, it is a way for people to...
All right, hold on. Hang tight, guys. Something's just happening. Lee's got to do something. And we are coming back.
Yeah,
we're back.
I've never had that happen before.
Yeah, that's weird.
Yeah, one of the lives just said, hey, prove you're live right now by me moving this puzzle piece to the right. Weird. Yeah. We go live every day from 11:30 to 12:30 Pacific. We answer your questions. He's the licensed loan officer. Don't believe him? His NMLS is right there, but he can recite it to you too. What is it?
1066958.
That's good. Did you read it?
Backwards.
Okay, cool. Mine is I'm at NMLS 944254. We are licensed loan officers. We close loans every month. We know what the process is. We deal with most type of loans. We will answer your questions. We'll even compete for your business if you want us to.
All right, you ready? I'm Chris. That's Lee.
Hold on. We ready to go? You want a rapid fire, dude? All right, cool. We've been Chris and Lee. We appreciate you guys. We're out.